Indiabulls Financial Services, PAT up 22%, NII up 8.5%. It's been a robust growth YOY in terms of the AUM as well for the company. Get in Gagan Banga to speak about how the quarter has been and how quarters ahead would look like. Gagan, great to have you. Thanks so much for joining in. Now, before we get into specifics about how the quarters ahead would shape up, just tell us a couple of points. One is, it's been a fairly strong performance on the profit after tax numbers. How have the NIMs panned out in the quarter gone by? And your AUMs have grown quite significantly if you look at how they are versus how they were last year. Can you give us a breakup of where, of how the total loan book scenario is looking like?
The quarter has been, very important for us. It's for the first time that the loan book has crossed 25,000 crores and profits after taxes have gone past 250 crores. So, extremely significant quarter. The company has been growing at a very stable rate of its loan asset book at about 2,000 crores per quarter now for over the last 2 years. So it's about 9 odd quarters we've been growing at the same per quarter growth rate. We had guided the market at the start of the year that we will grow our numbers give or take at about 30%. And if you will look at all of our numbers, be it loan asset book or our profits, they've been growing at more or less the same rate. My sense is that going forward, we would continue to grow at about the same pace. The loan asset mix has also been quite ideal. So we have 70% of our assets coming in the form of mortgage assets, 10% on incremental basis, and 8% on book is commercial vehicle assets, and about 20% is the corporate loan book. We've been maintaining this steady asset mix for the last almost 2 years, and we continue to incrementally disburse in the same pattern. So going forward also we will have this mix of 70% mortgage assets, 10% commercial vehicles, and 20% would be the corporate book. And all of this, we've been targeting ROE of 20%, and we have been able to successfully defend that number. So ROE will remain at about 20%. For us, since we remain very, very highly capitalized, as our projections are, we will end the year at over 19%. Last year we were at over 20% capital adequacy. The more relevant number for us is spreads. Our spreads are at about 3.95%, and it is heartening for me that through this interest rate cycle we've been able to defend our spreads between 3.5% to 4%, which is again something which I had guided the market for, that our spreads long term will be in the range of 3.5% to 4%.
Right. Mr. Banga, morning. If you could also then give us a sense of how do you see the total assets under management really panning out over the next quarter as well as FY13? Do you think that the mortgages side would continue to dominate the AUMs?
Mortgages would continue to dominate, so we will disburse in the same pattern as the book is, which is 70% mortgage loans, 10% commercial vehicle loans, and 20% corporate loans. And we have projected a growth of a little over 30%. We had started the year at about 20,000 crores of assets, so we will grow at a little over 30% on that. We've already achieved a number of 25,000 crores.
Again, I'm painting a hypothesis out here. Since you mentioned that all through this interest rate cycle you managed to defend your spreads quite attractively. Let's assume that there is an interest rate cut or two in the first half of the current calendar year. Would you focus more on increasing your spreads, or would there be more aggression in lending out, and therefore even if it comes at the cost of spreads, so that you maintain your spreads as around 3.9 to 4%, but the credit growth or the offtake increases quite significantly from your books?
No, our focus is and has been to lend to the most prime retail clients. So that would continue to be the guiding force. If for any reason tomorrow the demand within the prime retail clients is to grow and grow significantly, our disbursement numbers would tend to reflect that. And if it is to come down significantly, our numbers would reflect that. We have been wanting to defend a spread of 3.5% to 4%. There is no intention of increasing it. You're well aware that the prime retail segment is also perhaps the most competitively priced segment in the country amongst all retail assets, and therefore there is no pricing power that a lender, with about 6 to 7% of market share has. We are a price follower, and our whole intention is to just remain focused on making sure that we are not lending to a weaker client. We have to focus to lend on the very, very, very prime client, which is the salaried clients in the home loan segment or the prime self-employed clients in the home loan segment, and that would be our focus. In the commercial vehicle space, for example, we don't lend to people who own less than 3 to 5 vehicles. So we are not lending to the first-time user where the yields are significantly higher. We continue to operate in a space which is competitively priced but is also very safe. So it is a mix of trying to manage your spreads between 3.5% to 4%, at the same time making sure that the NPL number continues to be very, very stable. In order to make sure that, God forbid, tomorrow the GDP is to grow down, is to deaccelerate further or is to slow down further, and there is a pressure on even the retail segment, we have made sure that today our provisions stand at about 150% of our gross NPLs. This includes all types of provisions: standard asset, floating, general, specific. And if we were to deduct the standard and the floating asset provisions, then our gross NPLs are at only about 0.28%, which is a very, very manageable number and perhaps one of the better numbers in the industry.
Right. Just dwelling on the asset quality factor a little bit more, Mr. Banga, we've seen a steady decline come in as far as the NPAs, the gross and the net NPAs, right from, the last December quarter till now. Do you think this trend is going to persist, and can we expect an even more improved number for FY12 as a whole and for FY13, the quarters coming ahead of us?
It's actually been for a little over 2 years that the NPLs have been coming down. So it's not 4 quarters, it is 9 quarters that the NPLs have been coming down. We have projected a range of 1 to 1.25% for our gross NPLs and 0.3 to 0.6% for our net NPLs. And we are optimistic that given the quality of underwriting that we have undertaken in the last 2.5 years, we should be comfortably able to maintain our NPLs within these levels.
Great. Can you maintain the kind of growth that you've shown in Q3 for Q4 as well? You think that's a reasonable estimate?
For the year, and that's how we would like to have our business looked at. It's a within the year slightly cyclical business. So Q1 tends to be low on credit demand and Q4 tends to be slower. For the year, we've guided for 30%, reasonably confident that we should be able to maintain that.
Fair call, Gagan. We wish you all the best for that. Congratulations on, as you said, a milestone quarter as well, and look forward to having more often on the channel. Thanks for joining in. That's Indiabulls Financial Services, fairly strong quarter. The stock has cooled off from the highs of the day, but the management confident of maintaining or meeting the guidance that they had set out at the start of